Stock Market Morning Prep video for Wednesday, October 29th. Well, market self put in a nice little day despite we had a gap up and really just consolidated pretty much most of the day, right up until about 2:45. The markets actually started to move higher again. It looked like there was some short covering. So we kind of cleared this base that we were talking about yesterday, again on very, very low volume. So we have this V-shaped bottom. We're going to go over the charts too as well. And I do want to see how the technology and the banking sector, financial sector is doing as well. Because if they're doing okay and we have the strong transports actually trying to make new highs again, well, we could say that we are ready to challenge the highs again. I think it's a little too early, and with lack of volume, that's a little disturbing. Russell did participate as well. Russell was up really the most. Excuse me, I'm just a little under the weather. 2.8% up on the day, where S&P was up 1.1%, Nasdaq 1.75%, and then Dow 1.12%. So, pretty good performance yesterday. But the worst part of it is the gap up and then consolidate all day with nothing to do, in a sense, meaning no real good setups. And then you have a rally up the last hour and a half, no pullback to enter. You'd have to close your eyes and get in. So again, not a great trading day. If you're an investor, it's a good day. But if you're a trader, not a great trading day. But anyway, let's take a look and see what we have here. In front, we have the SMHs, which is the semiconductor ETF, and it's doing quite well. You can see, and again, if you look at these volume profiles, these volume zones, you see these thin zones, and you see how they really hold pretty true. And then once we broke that, we actually just flushed down to this area, to the bottom of this low, of this previous low, and then we rallied up again. So you see it's like a V-shaped bottom. So take a look at the XLK. Same thing with the XLK. This is the technologies ETF. And again, we had this thin zone up. We rallied all the way up here, up on the zone, and then we failed again back to this lower end of support. And then again, this V-shaped bottom. And look at the volume. Volume is just extremely low here, and it's not a good sign. But again, if a volume confirms price, but if the price is rallying up, that's what pays. So unfortunately, sometimes you have to go with what the pattern is and what the candlesticks are telling you, aside from volume. Otherwise, you wouldn't trade at all, especially in this low volume environment. Now here's the XLF, which is the banks and financials, doing quite well. As you can see now, above the 50-day moving average, and not too far away from challenging these highs. So again, V-shaped bottom here. Did we actually have a correction? I would say if this holds, if this pulls back and holds, I would say this is not a correction at all. We're talking about, I think it was 5.5% maybe, not even, and that's just the norm that we've been having for the last 2 years. So not really a great correction that I wanted to see. I was looking for a good 10-15%, where if that's the case, we shake out all the week longs, and then we can start really buying this market going into 2015. All right? But so far, so good. Now let's take a look at the indices. Spider's back above the 50, very good. But look at the volume. Volume was a little bit better than Monday, but still really, really terrible. Terrible volume. And then we're above the 50, and again, 78.6% retracement. Now we're breaking through. If we take that out, then we're going to be challenging the highs again. And we're talking about, what, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days from 181 to 198. It's almost 20 points in 9 trading days on no volume. And this is what, when you see gap up, gap up, gap up, the price action and trading intraday gets a little bit more difficult, because you're waiting for your pullbacks into support. You're waiting to take out bases, and what happens once they go, and then you get that, looking for that pullback, you really don't get it. 30-minute, you can see clearly here. 30-minute with the Bollinger Bands. Guys, tell you, if you don't use this, you should use it. It's excellent, excellent tool. 3 days of consolidation. What did I say? I said, guys, we're going to look out. Price going to vacate the premises. Bollinger Bands are tightening. That means that we have energy building in the market. It doesn't tell you which way, but if you look back and you say, well, we're making higher highs, higher lows, the best thing to say would be up, right? Well, we did get a gap up. We consolidated all day. You can see this consolidation. Let me just open that up for you. Consolidated all day, and the last hour and a half we rallied with no pullback, and that's a little difficult to trade unless you just close your eyes and buy, and then you're not trading. But you can see here, really from this day on, we had 1, 2, 3, 4 full days. That means pretty much all of this week and half of last week doing nothing. literally just in trading ranges. And then here we gapped up and we traded for 2 days here, and then we gapped up and we consolidated for 2 days here. So you can see energy was building, we gapped up 2 days, and then we consolidated here for 3 days, and then gapped up again. So you can see, but definitely should be used in your trading toolbox. Diamonds, again, back above the 50-day moving average, doing quite well. But again, V bottom, very low volume. So we just have to be cautious here. IWM. Now, this is a very good sign, especially for the bulls. We finally got back above the 200-day moving average. That's a very good sign. And yesterday, as I mentioned, here's this horizontal base that we've created near the lows. So this here is a very good sign that now if the IWM could get going, we could start really going and challenging the highs again. I know it sounds crazy, but it is what it is, guys. I get a lot of emails. Oh, this market's nuts. Don't have an opinion with the market. Trade what you see. If you trade what you see, you would have no opinion, no bias with the market. I'm not saying that you can't say, well, I think the market's overstretched. I say it all the time. But that doesn't mean that I go out and look to short the market. I'd love to short the market, but if it's not giving it to you, there's no reason to do it. So just, be on the same side of the market. The trend is your friend, as they say, and it's so true. A little overboard here. You can see that in all of the indices now on the daily chart. So just get a quick heads up here. Here is the Qs. Technology doing fantastic, but look at the volume. Volume is extremely low. Now we're coming into some overboard readings in the daily chart. And we are just about challenging the highs in technology. Technology has been the winner of 2014 by far, the leader by far as far as strength is concerned. On the way up, on the way down, it was the least index to take a big hit out of everybody else. So not bad, not bad. That's another good sign. Now what we're looking for. What are we looking for? I'm looking for any type of catalyst that can run us back down into this area, back to the 20-day, would be nice on all of the indices. And then if that can happen, and then we can start to rally back up again, that would be that higher low that I'm looking for. And that would just at least reset all this overbought rating on the daily chart, and then we can buy this market going into the end of the year. So we'll see what happens here. We are a bit stretched, though. Just keep that in mind, guys, okay? Have a great day, everybody. We'll see you tomorrow. Take care.